Every day, I get some version of the same question. What is this purple shape sitting behind my candles? Now, the purple shape you're seeing behind my candles is a volume profile. And once you understand how to read it, you stop asking, where is price going to go? And you start asking, where did the market actually agree to trade? Those are two very different questions, and only one of them actually helps you. Now, a candlestick tells you four things. Remember, the open, which will be the low, and the high, which will be the close on a bullish candle. And on the bearish, it'll tell you the open, which will be the high. Yep, no, that's correct. And the close, which will be the low. So there's only four things, that's it. A volume profile tells you everything that you need to know. And it will tell you something completely different than just the open, the close, the high, and the low. It tells you how much trading actually happened at every single price within that range. Not just where price visited it, but where it actually did business. Look at the shape. White sections mean heavy trading. For example, heavy trading in this area, heavy trading in this area, heavy trading in this area, heavy trading down in this area. If you take more, heavy trading in this area. White sections mean heavy trading happening right there. The thin sections means price passed through almost nothing. So pretty much it was a low volume node. No one interacted in that zone. For example, here you see price immediately went through this zone because there's no volume. Same thing, dumped through, nothing. Dumped through because there's low volume. This is ideally where price will go through. Okay, I want to show you guys the point of control. Now, the point of control is this white line right here, POC, point of control. This line is the widest point of the whole shape, and when I say the whole shape, I mean of the volume profile. The single price where the most volume is traded that day in that specific section. And for example, right here we're looking at the 1 minute chart. Price at this moment was heavily traded in this zone. That's where you see all this volume. And on the 4 hour, we see that price on this section right here was traded significantly right here. Make this easy for you guys. Go yellow line. In this section, it was traded right here. In this section, it was traded right here. Over on this session, it was traded down here, and you can see because it's ranging from here all the way over to the next day. So now here's what people get wrong. They think point of control is a great place to enter. It is not. The point of control is where the market found the most agreement, which also means it's the most contested, most chopped up price action on the chart. Buyers and sellers were both there in size, and that is not clear. That's an actual battlefield. There's no clarity. If you're entering right at the point of control, you're stepping into the middle of the fight that's still being decided whether price will go up or down. For example, we see price was hanging out in this area for quite a bit for, let's say, remember, 4 hour candles, 4, 8, 12. Price finally broke out of this value area high and squeezed through all these low volume nodes, hung out around this price, squeezed through, struggled a little bit, squeezed, struggled a little bit, climbed back down to the area where there's a lot of volume, the next high volume node, and is pushing back up at the next high volume nodes. So keep that in mind. If you're entering at the point of control, it is the worst thing you can do because it's the most contested, most chopped up price action on the chart. Both buyers and sellers are entering in size. Now, around the POC sits something that's called the value area. Now, the value area is ideally 70% of the day's volume, contained between two edges. The edge number 1 is called the value area high, which is the top bar. Now, the second edge is called the value area low, which will be the bottom edge down here. And on a smaller chart, it will be the value area high, the top edge, and the value area low will be the bottom edge, which is down, let me see this chart, down here. This is the value area low. So now, these edges are where I actually pay the most attention, not the middle, but the top edge and the bottom edge. Why? And that you might ask why, and that's because value area high and value area low represent the boundary between the agreement and disagreement. Inside the value area, which is everything in here, and if you have a heat map, the heat map will show you where the value area is. So you see right now price is way above the actual value area, therefore it's breaking out. Inside the value area, the market is the most comfortable. Once price pushes outside the value area high or the value area low, which we're seeing right now, you are now in territory where the market previously rejected trading. There's less conviction, there's less participants. So when price comes back and retests the value area high and the value area low, that's the real decision point. Either the level holds, or you get rejected back into value, or it breaks and you get a real directional movement. Either way, you get information. At the POC, you mainly get noise. And as right now you see, we had marked out the zone because price was ranging, therefore it's in balance. It broke out, it was in balance for a little bit, and it continued breaking out. And we see price is slowly coming back down, wanting to find balance. And there's a lot of empty space here that has not been touched. Now, let's zoom into the actual shape itself. We'll do this section right here. We're not going to look at just the edges, the top edge and the bottom edge. Let's move the yellow line. And you'll notice that the profile isn't smooth. It bulges in some places and pitches thin in some other ones. So here, big bulge, big area, small area, big area, small area, big area, big area, small area, and another big area. Same thing on this other section. Small area, very thin, big area, a lot of volume, high volume node. Small area, as you see, small area, big area, high volume node, small area. Same thing if we were to move down here. This was a perfect example. A little bit of a high volume node, not too much, not too little, but then super thin. The volume thins out, and then boom, a lot of volume. It really gets really thick. That box right there is a high volume node, a cluster where a large amount of trading is concentrated at a very tight group of prices. High volume nodes act like magnets. Essentially, price, as you see, price broke through, it thins out. High volume node, it broke out, but then it came back up because it reattracted it like a magnet. So then, price tends to get pulled back towards the high volume node, and once it arrives, it tends to slow back down and rotate there, because that's where most of the participants agreed on its actual price. Now let's compare that to the thin sections of the profile, low volume nodes. Almost no one transacts in these areas. We see that there's very little time in these areas right here, and this is the most nice example that I can give you guys. No one transacts there because almost nobody transacted there. Price does not want to sit there either. It moves through those zones super fast because there's no agreement and there's no reason to slow down. So it just gets squeezed through. It just squeezes through, okay? Now, something that I want to tell you guys is here is where it gets powerful within the higher time frames. 4 hour, the 1 day time frame, the weekly time frame, and the monthly time frame. I don't just look at 1 day's profile as in just specifically this day. I look at them all across. I stack them. a minimal of at least 3 days so you can somewhat see where price will go. Okay, we see price is hanging out. Once it broke down this value area low, price pushed back down, but then there was no balance over here. Therefore, price pushed back up to find its balance within this day. Again, we see that it touched the previous day's point of control and got close to the value area high. Didn't really like it, so it came back down, established its balance within this section once we were in pretty much yesterday's day. Didn't really like it, came back down, tested this high volume node, didn't really like the agreement there, and it pushed back up. Price was hanging around this area for quite a bit, pushed back up higher using this day's value area high. I didn't really agree, especially because there's no volume over here on this day's. So then price is coming back down, high volume node, again it's a magnet, and now price is currently hanging around trying to find balance. So that's what happens. Price from a later date comes back and will always react. That's not a coincidence. That zone still means something to the market because real size was traded there before. And this is why I keep my previous day's profiles marked on my chart at all times, not just today, because the market has memory. Volume profile is how you read it. You get to see where price has previously interacted, because ideally price always likes to stay in balance, auction market theory, and I'll break that down in another video for you guys. Now, this is a crash course video, so everything is given to you super fast, but it's stated as facts. So, the POC tells you where the fight happened. Price was hovering in this area. Buyers and sellers aggressively fighting with each other. That's why we see a high volume node here. Now, the value area high, value area low, top edge, bottom edge tells you where the agreement ends. The high volume node, the low volume node, tells you where price wants to slow down versus where it wants to move fast. That's the foundation. How I actually use these levels to time an entry. Now that's a deeper layer question, and that's what Liquidity Society is for. Remember guys, the market doesn't lie, neither does the data. If you have any questions about volume profile, please don't be afraid to ask. And if you see right now, clear example, the previous day and 2 days ago, high volume nodes within the same time frame, same area, same price. Price broke out, got attracted to this high volume node, pushed back down, got attracted to this high volume node, and now is pushing away. That, my friends, is the fastest breakdown of a volume profile. I hope you guys learned a lot. I know it's very, very fast paced, but I hope it kind of cleared up how to use the volume profile. Now remember, smile because you matter, and have a lovely day.